Hey, it's Dario and this is Coffee with the Markets. And today I wanted to talk to you about what it's maybe coming a recession in Argentina. And also I would like to talk to you about the situation in the US, because are we going to see a recession also in the US? Hey again, it's Dario and this is Divity Finance, a platform where we can share our best tips and tools when it comes to trading, investing or finance in general. And if you love the subject, please consider subscribing. So let's talk about the situation in Argentina, because let's see first what happened. We are talking about Mauricio Macri, who lost the first round of election in Argentina. Macri was really related to the markets and to the Argentinian economy, and him losing the first round of election really shook the markets. And we are talking about a really high shook, if you want to call it that, okay? We are talking about a minus 37% in the stock market of Argentina. I'm watching at the S&P Merval, who traces the biggest stocks in the Argentinian stock market. And a 37% loss, it's not a little number. For an economy, a 37% loss is high. That means that many investors lost their confidence in the Argentinian market, in the Argentinian stock market, and that's never good. And what happened to the Argentinian peso? It has depreciated by 30%. What does that mean? Guys, let's think about this, because we are not just talking about numbers and we are just not talking about losses of money. Because we are talking about the fact that people, the Argentinian people, got 30% poorer in respect to the US economy. If we watch the US dollar against the Argentinian peso, which again lost 30%. I want to underline this. It means that the Argentinian people got 30% poorer in respect of the US economy, which is not good. And also this means that for the Argentinian economy, buying products from outside the country, it's 30% more expensive. I want to throw a little bit of numbers, because I don't know if you can understand this, okay? Because at first I had problems understanding this, okay? Let's say, for example, you have to buy something that costs $1,000 in the US, okay? I don't know, maybe you have to buy iron from the US, okay? The US doesn't have a lot of iron, but let's just keep it an example, okay? You have to buy $1,000 of iron. Now, compared to 2 days ago, it costs 30% more. That means $300 more. That $1,000 of iron doesn't cost $1,000 anymore, it costs $1,300. I want to say this because I don't know if people really understand what it means for an economy to drop 37% on the stock market and drop 30% on the value of their currency. But now let's talk about the US, because I don't know if it's this week the problem, or maybe August is the problem, but we have all these kind of scary news, I would say. Yeah, let's talk about this, because we are near the 10 and 2 years yield of the treasury bond reversal. I want to explain a little bit what the reversal is in this case, because what this is that the 10 years yield of the treasury bond is lower than the 2 years treasury bond. What does that mean? That means that the 10-year treasury bond increased in the secondary market. That means that more investors are trying to get into the 10 years bond, and which means that less investors want to go for the 2 years bond, which means again that investors have less confidence from now to 2 years than from now in 10 years. And that's really bad, because that means that investors lost the confidence in the short term and they are moving to the long term. So yeah, this is a reversal, okay? We are near the reversal, which means that we touched the 0.01 points of difference, and we are now at a 0.04. What happened in the past when a reversal happened? It happened to be a recession in the next couple of months, in the next couple of years even. So it's not like when it's going to be a reversal, it's going to be a recession. And it also doesn't mean that if it's going to be a reversal, it's 100% going to be a recession. Okay, so don't panic, don't go sell your house or do whatever you want to do. What do we want from this reversal? Why do we watch this reversal? Because we need to be prepared. Being an investor is all about being prepared, not timing the market, not knowing the future, not predicting anything, just being prepared and have all the options. If the market does that, I will do this. If the market does this, I will do that. Okay, this is what I think an investor should do. Not predicting the future, okay, just adapting to the present. That's it. That's what I think an investor should do. But yeah, I wouldn't worry too much, okay? A recession, first of all, a recession is not that bad, okay? Let's debunk this myth that a recession is people going on the street and selling their houses and dying for I don't know what, okay? It's not a disease, a recession, okay? It's normal. Markets do have recession. They need a recession, okay? Maybe I will talk about this in later videos, but we constructed this economy and this economy needs a recession every now and then, okay? This is due to inflation, this is due to deflation, this is due to the monetary policies that we have all around the world. So a recession needs to happen. A recession will 100% happen when, I don't know, nobody knows. Now, 2 months from now, 2 years from now, 10 years from now, 20 years from now, it doesn't matter first of all, and nobody knows. And just a quick note, if we've seen a 10 years bull run in the stock market, it doesn't mean that a recession is more probable, okay? If I flip the coin 10 times and 10 times I get cross, it doesn't mean that the next time I'm gonna get head. I still have a 50% chance of getting cross. Let me know in the comments if you want to have a talk about the probabilities, because many people don't understand the probabilities, and I think that probabilities or the study of probability is really crucial when it comes to investing, okay? Nothing like mathematical or numbers or millions of numbers, just the concept of probability, because it's not just the fact that the next flip has a 50% chance of being cross or head, okay? It's a little bit more complicated and maybe I want to talk about it, okay? Just leave a comment if you want to see a discussion about this and maybe you want to have a discussion about this. But going back to the stock market, just be careful. We just want to acknowledge that there might be a recession. We don't want to predict a recession, and a recession is not that bad. With a recession, it comes opportunities. The markets do go down, the prices go down, and there is an opportunity to make more money. We just need to be careful, and we don't want to blow up our money. That's the basic concept, okay? The Warren Buffett rule: don't blow up your account. But hey, this was all I had to say for this week. If you enjoyed the video, please leave it a like and let me know in the comments down below what do you think about an upcoming recession. So yeah, let me know in the comments and I'll see you in the next video. Hey, it's Dario and this is Coffee with the Markets, and today I wanted to talk to you about an article that I was reading which talks about fund managers that are turning their focus on millennials, but not just fund managers in general, ETF fund manager. So I would like to take this occasion also to talk